To many Americans, the economy feels like it's in bad shape right now. And we just learned today that the Fed isn't cutting interest rates anytime soon. This while prices at the grocery store are only going up. But one generation is doing much better than others. And believe it or not, it's millennials. A new report from the Center for American Progress shows Americans who were born between 1981 and 1996 are starting to see their wealth boom.
We all know it. Millennials have been the butt of many jokes.
So you think that young people have now got the prospect of never owning a home?
Absolutely, when you're spending $40 a day on smashed avocado and coffees and not working, yeah, of course.
They like to splurge and enjoy pricey hobbies. And avocado toast, of course. But millennials can't cough up enough money to buy a home. But now the tide is turning, and they're becoming more like Parks and Rec's millennial hero, Jean-Ralphio.
A flush with cash.
Millennials are now on track to become the richest generation in history, thanks in part to the pandemic. According to the Center for American Progress, the average inflation-adjusted wealth of younger Americans grew 49% since 2019. That's a jump of $85,000 in overall wealth. So how did they do it? During the pandemic, interest rates fell to near zero, finally allowing millennials to enter the housing market. And then inflation increased the values of those homes. Mutual funds and stocks rose as well, while credit card debt and student loans fell. And no other age group saw the same benefits. Millennials will also inherit a bunch of property from their baby boomer parents over the next few decades. And another study from the University of Chicago Press shows that $90 trillion worth of assets are about to move between generations.
All right, and George Kamel is one of those millennials. He's also a personal finance expert, host of the George Kamel YouTube channel, and the co-host of the Ramsey Show and Smart Money Happy Hour. George, welcome back to the show. Okay, so right now, it's good to have you. So right now, people don't feel like the economy is great. But now we have this age group of millennials that their money has gone way up in the last few years. So what is the disconnect?
Well, we talk about feeling like the economy's not doing well, but the stock market, we hit 22 record highs in 2024 already. And so it really depends how you look at this. It might feel like the economy's doing bad if you're trying to go into debt right now and you're racking up credit card debt at 22% APR, the car prices are jacked up and the interest rates are jacked up. But for those of us that are avoiding debt and trying to build wealth, now is a great time to be in the economy. And if you don't jump off the roller coaster, as we've seen over the last few years, it will pay dividends and have huge benefits.
So a lot of millennials were actually on the cusp of buying a house right before the pandemic hit, and that's why they did so well, as Chris pointed out in his package. But now we're in a scenario where those who didn't are having a hard time buying homes. It's not only millennials, it's other people's too. And as we saw today, the Fed isn't changing interest rates anytime soon. So what does that mean? Could things get worse for millennials?
Well, I think there is some real truth to the math of it. I mean, we saw that everything went up 50%, which means 50% less buying power for those hopeful homeowners. And so I feel for them. They're not going crazy. It is a really hard time to get into the housing market right now. But the truth is that they can still affect change. They can affect their ability to get into place where they can buy a home, even though it's more expensive than it was. And as we've seen, the housing market will show us that houses will be more expensive 5 or 10 years from now. And so we say the best time to buy a home is when you're financially ready. Get out of debt, get an emergency fund, work on that down payment, and then buy a house when you can actually afford it and it's not eating up all of your income.
Great advice. Okay, so this young household, the people who have seen the growth, they haven't seen that since the Federal Reserve started tracking it in 1989. So this is huge. But what does this mean for their financial security, for millennials' financial security?
Well, as much as, they feel hopeless, and the truth is, wealth is a moving goalpost. And so I hear them saying, well, George, $1 million isn't enough anymore. And I'm going, that's okay. It's okay to hit $1 million as a milestone and then say, I need $2 million to retire. You have the ability to do that when you're a millennial with time on your hands. We also get calls on the Ramsey Show from folks in their 50s and 60s saying, I didn't invest at all. What can I do to retire? I want to retire at 62. And I'm like, get a time machine. I mean, time is really and compound growth is the secret sauce to building wealth. So as millennials, keep investing consistently, and stay out of debt, they will inevitably build wealth, even without inheriting assets from their family.
It seems like they're ahead of the game with this boom. George, Kamel, appreciate your insights. Good to see you.